G'day everyone, welcome back to Pete's Investing. Today is 25th of March 2023. This is the nat gas price update. This looks a bit busy, so I'll explain all this as we go through this, through each of these time frames. So this is the daily, the 4 hourly and the hourly. Let me just first of all expand the daily and explain where we are. So I've drawn these diagonal descending trend line and also this ascending trend line you'll see here in the larger time frame. But also in the close-up, you see this red and the blue line. That's a support and resistance lines drawn in terms of where we are today with the price action. You'll notice the CCI moving average is declining, and that's our major indicator in terms of movement. So still a very bearish outlook so far. Now I did follow the CCI, for those that are new to the channel, I did follow the CCI over the moving average 200. They closely align most of the time. You'll see there when the CCI breaks down from the moving average, so does the price chart. And when the moving average there breaks up, for example, back in middle of 2020, so did the price chart as well with the moving average 200. There is a major difference though. The CCI generally gives a clearer or an earlier signal to exit or even enter the trade, or start trading I should say, not enter any particular single trades. So you can see there, for example, most of the time they align. In this case here, the CCI broke to the downside and remain underneath the moving average, which was a very bearish signal, and that gave you an early sign, which is equivalent to that area up there, to exit the going long in natural gas in this case. And this applies to almost every instrument using the same method and same indicator. So I would have avoided going long even during that period. I would have avoided going long unless you wanted to trade the lower time frames, and we'll cover those in the next couple of minutes. So overall, we're still stuck in this diagonal range in terms of where we are today, but also with these two support and resistance lines. So let's now drill into the 4-hour time frame. Now you'll notice the main thing to notice here is, again, there is a divergence happening with the CCI. It's in a bullish divergence versus the price chart. It's a bit hard to read that. Let me just try and make it a bit cleaner to read. There you go, hopefully that's helped. There is a bullish divergence on the CCI versus the price chart, and that's a positive in terms of potential reversal area. And that blue line there, that support line, is a major support area forming as we speak. So there may be a bounce from there. Now for us to confirm that bounce happening, we need to first of all see it break above this diagonal descending trend line, which we showed you earlier on the daily chart. So we need to say break above that initially, then ultimately break above this key resistance area. So that's potentially the area we need to look at in terms of where we are. Now again, let's now go to the hourly chart in a bit more finer detail. So again, let me just draw this and show you. Okay, on the hourly chart, in a smaller time frame, you'll notice in this range here, the price has come down as far as the 88% level. It's 100%. So it's come down in the 88% level, which is probably too far to be bullish, but that's at where it stopped, and that's our key support area we've drawn, and that's our diagonal ascending trend line. So that's our next level. So if it breaks through that first level of support, that's our secondary level, and if it breaks below that, well, it's going to be a free fall, and the outlook is looking pretty grim for natural gas if it falls below that. Now I've drawn this secondary retracement level in this minor area here. So again, as I said earlier, at the moment it's sort of barely touching the 23% retracement. So if to be more bullish, we need to see it break beyond the 50 to 61%. That's generally the key area on Fibonacci retracements, and that 61 retracement also aligns with our key resistance area. So if it breaks that key resistance area to the upside, that's a positive outlook in terms of where this may go. Then obviously we want to see it break above that resistance initially, as I said earlier, and secondary we want to see it break above that diagonal descending trend line. So that's where we are on the hourly time frame. Also notice, going back, so at the moment we're fairly bearish in terms of the outlook, although there is some sign of a potential reversal. So if you haven't traded this yet, I'd probably hold off. Or the other thing I want to mention as well is for those that are Elliott wave counters, I've drawn this Elliott wave from that peak up there on the 4-hour chart. So 1, 2, 3, 4, and 5 hasn't yet ended. So that's a potential Elliott wave count. So again, if it breaks down below these support areas, we're going to see this Elliott wave potentially come down as far as the 50 to 61%, which would be very close to around the the 1,000 level, price level, and if anything. So again, we're hoping this divergence plays out. We see a bounce to the upside and more breakout to the upside if you are planning on going long. But overall, if you look at all the time frames, looking at the CCI moving averages, they're all fairly bearish with the exception of this divergence. So again, just hold off going long, and if it breaks below these support levels, then I'd say start taking more short positions. Otherwise, if it breaks above that resistance area and that diagonal descending trend line, then take more bullish positions if you're inclined to. So that's where we are at the moment. If you like the video, subscribe and like the channel. If you really like the channel, support us on Patreon, and we'll see you in the next video.